NVIDIA stock and other semiconductor companies have benefited dramatically from the AI space, and many, like myself, believe that the AI revolution is just starting, while others think we might have hit the peak already. However, what if I told you that OpenAI's recent model is a game changer for the AI market, showing the massive amount of computational power still needed for the future of AI? You know what's another game changer? You not forgetting to hit the thumbs up and subscribe button. All jokes aside, in today's episode, we will do the following. First, understand OpenAI's new model and why it is different from previous methods. Number 2, understanding some of the steps in AI computing. Number 3, potential AI winners. And number 4, my final thoughts. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first let's try to understand the new model. Recently, OpenAI unveiled its latest model, o1, also known as Strawberry. What sets o1 apart is its ability to think before responding. It's not actual thinking, but that's the best way to kind of look at it in a top level overview. Essentially, o1 can engage in multi-step reasoning by allocating more compute power, aka more chip strength, during inference. What really caught my attention about this model is the weekly limits. If you are a paying subscriber, you can only use this model 50 times a week, which is insane. As normal models, you have only kind of like an hourly limit, never something like a weekly limit. The only reason this would be a thing is due to compute capacity. So if this was running at full capacity, OpenAI would need a lot more computational power, which means more AI chips and a lot more AI chips in general. Now I want to take a closer look at the AI computational segments. So to understand the impact of o1, let's break down the AI development lifecycle into 3 main segments: pre-training, post-training, and inference. Pre-training, this is where the AI model learns from vast amount of data. Traditionally, this is the phase that requires immense computational resource, making it accessible only to big players with deep pockets. Then you have post-training. After pre-training, models undergo a form of fine-tuning to specialize in specific tasks. Now, the final thing is inference. This is the real-time generation of responses based on the trained model. Inference is where o1 introduces this massive shift by allocating more compute to allow the AI to think longer before answering. Now, while I was doing my research, I saw that Senior Research Manager at Nvidia, our #1 company here, Jim Fan, had a lot to say about OpenAI's Strawberry. So Dr. Jim really praised this amazing model that OpenAI has created, and he mentions that right now a huge amount of compute is shifted to serving inference instead of pre and post training. Now that we understand the new model, that we understand kind of the life cycle of AI training and AI solution, I want to talk about obviously the influence in the semiconductor space. So OpenAI's Strawberry model represents this new shift or model by shifting a significant portion of compute resources to the inference phase, as we saw earlier on. I also don't believe it's a simple shift though. I think now in the AI chip market, you have 2 factors that are growing the demand of AI chips and AI computational power. The first is you have big tech continuing to develop new foundational models that are breaking new limits, which will require intense computational power. We've heard from Oracle's CTO that training a new foundational model requires about $100 billion investment, and he mentioned this during Oracle's most recent earnings report. Now you are seeing a huge exponential demand for computational powers as models think and use more resources. Our research at OpenAI, known as Noam Brown, mentioned that o1 thinks for seconds, but they aim for a future version to think for hours, days, even weeks. Inference cost will be higher, but what cost would you pay for a new cancer drug, for breakthrough batteries, for a proof of crazy hypothesis? AI can be more than chatbot. So we can see that there's 2 factors that are really pushing the computational capacity needed in the AI space, which in theory means a lot more AI chips. So there are three ways that the AI chip market is now being impacted. The first way is the increased inference compute. The second is the custom ASIC solutions. And third is the memory solutions. So as we are seeing an increase of computational power, as models like O1 require more compute during inference to enable prolonged reasoning, the demand for high performance AI chips will continue to surge. And I do believe this is going to continue to be strong for companies like Nvidia and AMD, known for their cutting edge AI accelerators, stand to benefit a huge amount. Now, I also believe this is a huge opportunity for custom ASIC solutions. Broadcom and Marvell, which specialize in custom ASICs, will see increased opportunities as custom ASICs optimized for prolonged inference tasks can provide the efficiency and performance needed for models like O1. This might be why in a recent Broadcom earnings, the CEO was a lot more bullish than before about custom ASIC solutions versus merchant solutions, aka Nvidia and AMD's overall H100 and MI300. Now, the final winner in this space would obviously be the memory solution. So all this will continue to push higher and stronger memory capacities, and I believe this will also be a potential win for Micron Technologies and all the other memory companies. So my final thoughts. Like I mentioned, this means a lot for the semiconductor market as we're going to continue to see growth in chip demand. The other thing is, I believe we're going to continue to see big tech players continue to invest in custom solutions. So companies will increasingly see custom ASICs tailored to their specific AI. So like I mentioned earlier, the big winners here are going to be Nvidia, AMD, Marvell Technologies, Broadcom, and Micron Technologies. So I did pull up kind of the financials and future PE ratios for Nvidia, AMD, Marvell, Broadcom, and Micron. We can see that the four players that are focused in either GPUs or ASICs on a forward 1-year PE ratio are sitting very, very similar to each other. They're pretty much all valued around the same valuation. If I was to pick my preference, I actually have it in this order. I think my first would be Nvidia, number 2 would be AMD, number 3 would be Marvell Technology, number 4 would be Broadcom, and number 5 would be Micron Technology. In all honesty, if there was an AI portfolio, I think this would be the big bulk of the semiconductor companies you need, followed by maybe some software plays in the AI space, and you had the true AI market portfolio. So in conclusion, OpenAI's O1 model is more than just a small update. It is, in my opinion, a catalyst for a significant shift in AI and, more importantly, the semiconductor landscape. By prioritizing inference compute and enabling prolonged reasoning, O1 not only enhances AI capabilities, but also drives increased demand for advanced AI chips. For companies like AMD, Nvidia, Broadcom, and others in the semiconductor industry, this presents a golden opportunity to innovate and capture a larger share of this AI market. Now, I hope this video brought value to you, as it did for me while I was researching this topic. So see you tomorrow, have a good day, and take care.